Bobby, what was that group text about? You said something about median price of homes. You want to get into the numbers because Chad's like salivating over here.
Yeah, we can get. I mean, that's kind of like the headline we'll get in for right off the bat with prices. It's interesting. We have a very odd dynamic with prices going on, and I won't say it's odd, but with so many high-priced homes selling, the average sales price versus the median sales price are two different worlds. And if you know what median is, the median house price is the middle number. So everything below, half of the homes that sell in town in a month, if you look at the median, is below the median and half is above. But then the average is you just take them all and divide them out. And because we have these super high-end homes selling, the average is makes you think the market's raging up, basically. But when you look at the median, and I pulled last month, you can play with statistics. Last month I talked about my first book in college was How to Lie with Statistics. I mean, that was the first book in Psychology 101 of all classes. But our median number in January in Lake Havasu was 429,000. That's your middle number. So half the homes that sold under that, and half the homes that sold over that.
That's lower than it's been in a while, isn't it?
The median's been dropping. The average in January is 578,000.
Whoa, that's a $150,000 difference.
But we'll get into the numbers. There were only 77 sales in January, only 77. Okay. And we'll talk about the $1 million number later, but it's a big percentage, so it's going to skew the average. And actually, that's the highest average I've seen, is in January for the average. But the median in May of 2022, last month it looked like we didn't go down that much year over year, and Chad called me out on it. But if you go back to May of 2022, that was about our high water mark. We were 522,000 on the median. We're at 429. So that's a 17.8% drop from May of 2022. Not year over year, because we fluctuate throughout the year. So that makes it look like a buyer's market. The average in May of 2022 was 570, and in January it was 578. But it's skewed with these high-end sales. And median, you got to remember, half the sales in town last month sold under 429,000. We hear about these 2 million, 3 million, all these big numbers. But half the homes in town sold under 429. There were several under 300,000.
So in summation, if you take that 4.5 or that 4 million or 2 million or whatever, that really skews the median, right?
Or it skews the median too, but not as much though, because it really skews the average, because if most of the houses in town sell for say 429,000 or somewhere in that range, or not, you wouldn't say most, but a big chunk of them sell in there. But you have a few sales that are 3 or 2 million, these kind of numbers. That's like selling 10 houses in one, almost.
Right.
So it skews the average. You almost want to throw out the over $1 million. But the median's a good number to really look at for the typical average buyer. We're down 17.8% from May of 2022 on the median, the middle range. And it makes sense to me because I know we're seeing the lower end houses have dropped in value.
Wow. So you said 77 sales in January, yes?
Yeah, for sure.
So 77. I'm going to ask, what's the cash number?
Oh yeah, I'm going to pull that up for you. I got it on my phone here, so I'm going to pull it up.
I need the cash number.
It's up there, and there's several that are unknown. I'll have it after the break for sure.
All right.
We'll keep that going. Now, on the sales prices too, you can look at sales price per square foot. Kind of moderates a little bit, and that's been running. It was $334 in November, $332 in December, and $331 in January. So we're trending down a little bit, but that gets skewed a little bit too, because when you have a high end. We had one on Eagle sale that I think was $2.8 million, and price per square foot was 800 and something a square foot. So that skews when you have a few of those, and you're not selling that many homes every month.
There's another one that's going to get ready to sell or go on the reports, and I'm not sure if it's on there yet or not. But the price per square foot of that house was incredible.
Yeah.
It was a 2-bedroom, 2-bath, and I want to say it sold for something like 900,000.
Oh,
But I don't know if it's hit the reports yet. It may hit this month,
Yeah,
or it hit earlier this month.
I'll look during the break too if I see it
Yeah.
to see which one it is. It is an interesting dynamic. The one on Eagle, for instance, we sold a beautiful house in the end of December on Eagle for $885,000. I mean, gorgeous, high end. It was actually the one that movie star's wife owned. I can't think of what it was.
There's movie stars here?
No, but there was 885,000. 5 doors, 6 doors down. One just sold for 2.8, and they're different houses, but they're both high end in our market. But obviously somebody paid a lot for the 2.8.
Eagles in the estates, right?
Yeah, residential
in the
estates area,
Yeah,
so-
there's some nice properties in
No,
there.
that's beautiful, and that was the highest end area of town for years and years and years. You know, no power lines above, and you had golf course area.
Yeah.
I got you. Chad, what's happening right now in your business? New products?
Absolute chaos.
Yeah.
You know, anybody who listens to the show on a regular basis knows that I talk about the pendulum quite a bit, and the pendulum with how rates have fluctuated over the last couple of years. And I've said it many times, so I don't want to kick a dead horse, but I've never seen it go the way that it did. And I'll give you a very good example. 2 weeks ago, we were locking loans back in the 6s, and we thought, last time we did the show, we were talking about, hey, we kind of feel things are turning a corner a little bit, and things kind of start looking like we might start seeing some improvements. Well, last week when we were in the 6s, and that kind of stuck from the last show up until last week. Now interest rates, even on conventional loans, with the most perfect scenario, if you're doing you have a 780 FICO and you're putting 25% down, we're back in the 7s again. So we saw interest rates fluctuate from those 6s. They weren't low 6s, but we were seeing them in the mid to high 6s. Now we're back in the the mid to high 7s. So to have an interest rate swing on long-term debt so rapidly within a week, it's just it's uncharted territory prior to COVID. So when COVID happened and we had what I call the COVID rates, which we'll probably never see again, the fluctuation of an interest rate 0.25% or 0.3% in a week was kind of a big deal. Now it's not uncommon to see that rate swing a point, and you sit back and you just throw your hands in the air. You know, so anybody who listens to the radio show knows that, you know, I advertise quite a bit, and you know, the interest rate battle is still continuing. It's still a problem. So to answer your question in very short logical terms, it's chaos. It's been very interesting to watch what's going on. So, you know, the refinance market is all but it's really dried up. There's just not a lot of refinance business out there, but we continue to talk about the HELOC and what credit card debt was. In the last show we talked about credit card debt's now, you know, $1.1 trillion in the United States, but all of us, including myself, you know, because I have a mortgage, we have extremely low interest rates on our mortgages, but we have debt. So what are we going to do with the debt? The HELOC is I think that we're coming into a time where people are going to really realize, hey, I have this debt. We need to do an analysis of it, and what can we do? So to answer your question that you asked a couple minutes ago, yes, we do have a new product. We actually just brought on a new lender by the name of the Loan Store, and we're doing HELOCs with them, and they have got, it's very difficult for me to advertise like quote unquote the best rates, but they are the best rates we've seen on HELOCs. For a good scenario, we are seeing prime plus 0.8, which that's credit union rates. Or if you're lucky enough to have a credit union that's subsidizing, you can see prime minus something, but those are pretty rare. Someone was telling me the other day that USAA or somebody was doing prime minus 0.25 for the first year, which is, you know, prime is at 8.5 right now, so 8.25 on a HELOC. And I do spend a lot of time on social media, not for the fact that, well, one, it entertains me. I like to see everybody yell and scream at one another. It's pretty fun. But I look to see, I belong to groups like, we have a group called Brokers Are Better, and it's all, to get into the group, you have to have a license, and it's only brokers in there, and we bounce a lot of ideas off one another. But one thing that really interests me is on the social media, you see we call it the dancing bear. It used to be the dancing bear for Lending Tree. They would have the dancing bear, right? So folks are someone will post, and it's Lending Tree again, I believe, is posting, HELOC rates at 7.47, and then I watch all of the responses from the people, and I don't usually comment on them all too much, but the folks were talking about, oh, that's crazy, that's ludicrous, that's out of control with this interest rate, and I kind of chuckled and I said to myself, Chad, what should you do here? So I had to make a post in there to which I said, wow, there's really a lot of uneducated people making comments about interest rates right now. And this is social media, and it's not just local stuff. These are folks from all over that are making these comments. But when you see those advertisements are just to invoke behavior. So you get people to click on it, and it's basically clickbait. It does interest rates prime -1, prime -1.25. You don't see them very often unless it's a credit union that's subsidizing it, which of course they're lending their own people's money, because as I've talked about many times on this show, nobody's lending their own money, but credit unions do. They lend their depositors money. But so does Wells Fargo, so does B of A, so does any institutional investor. They're lending their depositors money. So if they're willing to take a loss on that and subsidize it, once in a while they'll run a special, but typically it's only going to be for a year or whatever. But to land this plane is that the prime interest rate right now is 8.5%. So if you can get a home equity line of credit at prime plus 0.8, you're doing pretty good. That's actually a pretty good loan. And we do get pushback from folks going, wow, that's kind of high. Well, no, not really. I mean, a conventional mortgage right now is at 7.5, 7 5/8. And that's if you're not doing any debt consolidation. That's like on a purchase with 25% down and you got an 800 credit score. Right. The biggest trend lately has been government lending. Even folks that are putting 20% down, they go, well, I don't want to pay mortgage insurance. But the interest rates on the government side are trending almost a point lower than what they are on the conventional side. So we're seeing maybe 5/8 of a point. So if you balance it out, it's like, okay, yeah, you have mortgage insurance, but that's not forever, Yeah. And what we've said is, what was it? Marry the house and date the rate, right? Let's get into the house, and then you can refinance it at a later date. And the great thing about Arizona is that refinance transactions are very inexpensive. It's not like California. California, you're going to spend $6-7 grand to refinance a house. Here, it's a couple grand. Yeah. And in the grand scheme of things, when you have $400,000 in debt, $2 grand is it's a drop in the bucket.
All right. Did you land the plane?
I don't know. You never know.
Welcome back to the Real Estate Power Hour. Oh! Bobby's got more numbers.
Yeah, let's go into, Chad wanted to know about cash.
Tell me the cash.
So, anyone out there that's looking for a loan, support your local lender like Mohave Mortgage.
Yeah, please.
These numbers are crazy. There were 77 closings in January we talked about earlier. 29 for sure were cash, at least, but it gets better or worse, depending on how you look at it. There were 15 additional that did not report. So, and typically the ones that don't report, I would say, lean more likely to be cash or some kind of untraditional type of situation. But even if you took half of them, seven, and that would put you at 30. That's
30. So what was the number? 29.
29, and there were 15 unreported.
Okay, so 29 plus 7, so we're 36 divided by 77. That gives us 46. We're right back at the 46 mark.
Yeah.
So we keep pushing that 45 plus % cash.
Yeah. Sure.
Which is remarkable.
It's
we just don't see that, and I think that we've talked about this a lot. There's a direct correlation between that cash market and the interest rates. What's going on with the interest rates?
Sure. I mean, and you go you can look at this. Of the 77, 7 homes sold over $1 million. So I didn't break 10%. It down. That's 10%. Higher end, and what we're seeing in and 7. Let's regroup there. 7 sold last year in 2023 as well, and 6 sold in 2022. So the number of $1 million homes isn't changing much. But in 2022, 142 homes sold in January, 77 this last month. So the people with money, it's not affecting.
Well, tell me about the inventory numbers if you brought those.
Yeah, I did, and they're starting to get interesting because I typically see that the numbers should be dropping this time of year, because this isn't typically our busiest time of year. And this is my opinion, but I've shared it with people for years doing this. You know, you sell in February or March in Lake Havasu if you want to get top dollar, and you buy, say, in August, and it just because of competition and reasons like that. But so normally we're incredibly busy in February. But our existing single families last month were about 319. As of this morning, we're up to 347.
For the year?
No, that's for sale right now.
Oh,
yeah, okay,
got it.
sorry, I didn't clarify that, but we're up to 347 for sale right now, and so it increased pretty dramatically from last month, 319. And not that many months ago, I'd say 5 or 6 months ago, we were at 250 for sale. And
so inventory is slowly creeping up, right?
But it's a weird dynamic, because that leads you into days on the market, and days on the market have been going down as of late. Or last year, our days on the market in January the average was 63, and in January this year were 46. But that might have to do with the interest rates that dropped at the beginning of the month, because that's when I was talking about we put a whole bunch of listings on our team in escrow, and then the last few weeks when interest rates went back up, it slowed down again.
Right.
So
yeah, I think that there's a massive correlation as to what's happening and the ebbs and flows and the peaks and valleys of the market as to what's going on with the interest rates.